Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 18th, 2022, and this is the Tuesday evening live stream live from the DC suburbs, the Washington DC suburbs. That's where I'm located. All right, let me close this. All right, I'm on the 15-minute chart looking at Bitcoin. As we said, as we've been saying for past 48 hours or so, I'm seeing a reversal. Okay, and the reason I was saying that was simply because I saw a descending wedge or descending channel, whatever you want to call it, and I counted 5 waves. Okay, remember when your impulse is in a wedge or a channel, not a channel but a wedge, and it's a diagonal, it's going to look a little different than a typical 5-wave motive wave, right? It's going to be in counts of 3, right? So you're simply going to do like something like this: 1, 2, 3, A, B, C. 1, 2, 3, A, B, C. 1, 2, 3, A, B, C. We don't see that all the time, but you do see it from time to time, and so it's something to be aware of. So at first glance, you're seeing this, and you probably don't know what to make of it because you see violations of Fibonacci levels. But remember, diagonals are different. Diagonal motive waves are different. So basically, let me back up a bit. Today I want to talk about a few things. One, I want to talk about what the target is. So let me remove this. We're on the 15-minute time frame. I'll explain this stuff in a second, but this isn't a cool little thing I'm working on, a little project. I'm looking to upgrade my skills and my technique, and that's going to be part of it. So anyway, we're going to talk about what the target is for this impulse up here. Okay, we're going to talk about not only the target but how long we can expect for Bitcoin to take in reaching that target. Okay, we're going to try and talk about those two things, and we're also going to look at EOS because I promised Leo I was going to look at EOS some days ago. I never have, and that's about it. I mean, we're just going to keep it short and sweet, and of course anything else you guys want. The live stream is the space, the place to sort of banter and ask. So yeah, this is the power of technical analysis, of good technical analysis. Not saying I always do good technical analysis, but I try. Okay, it's the power of the Elliott wave principles, right, that enable us to see the summation of a trend, and as a result, the initiation of a reversal, where most analysts today are saying, I don't know, it can go up or it could go down, or they're reading bullish divergences on a certain time frame, but they can't really tell you when or what's going to happen with any degree of accuracy. They just said, well, it's looking like it can go. It's just Elliott wave theory just gives you so much more confidence to say, if you count 5 waves, you count 5 clean waves, for sure, even if this is part of a correction, meaning it's basically just a temporary, brief interruption of this trend, you're going to get it because you have 5 waves. That's the power of technical analysis. So, or that's the power of Elliott wave theory, right? But this is a big reversal, and why are we saying big reversal? Because we have 5 waves, but in context of these 5 waves, you see you have your A wave, your B wave, right? And these 5 waves are part of this larger B wave trend. That's the beautiful thing. We have context. Elliott wave theory, when you learn it properly, gives you context. And let me underline, underscore, emphasize, when you learn it properly, okay? Not an expert. I'm not saying I'm an expert. Some people may say I'm an expert, but you want to reach expert status. And the way you reach expert status is you continually learn. I'm continually going back and watching Elliott Wave International lectures or reading different books, right? I don't like Prechter as much. I think he's a bit dry and long-winded. Prechter, Robert Prechter, Bob Prechter, one of the foremost Ellioticians, right, in the world. Even he gets stuff wrong. And all I'm saying is that there are good resources, authoritative resources that you can go to learn your basics, okay? It's not as easy as knowing all the rules and then being able to chart properly, right? You not only have to learn all the rules, but you have to internalize them so that you have absolutely no doubt that okay, 5 wave, you know your levels, you know your 1 wave retrace, your 4 wave retrace, all those things. You don't have to think about them. If you have to think about those things, it's going to be difficult to trade, because trading your knowledge of Elliott wave principles is another level. Please understand this. Charting is one thing, right? Charting is relatively easy, but trading what you know is another level. It takes another level of mastery, right? So you can't really trade well if you don't chart well, right? I don't think, right? And I don't know. That's just my own opinion. Let me know what you guys think. But to be able to really get all the fundamentals and to master the fundamentals, I think I always say just get a good book, right? Because one little mess up, like in one little rule that you don't properly understand. I'll give you an example. A lot of people at Elliott Wave International say a motive wave starts 1 2 1 2, okay? Meaning the way it works is once a trend starts, you can go, you basically, let me draw it out. They say like this, 1 2 1 2, something like this, and then you get your 3rd wave. And what some people like myself, some people like the author of Elliott Waves Made Simple say, this is not a 1 2 1 2. This is an A B. This is A. This is B, and C is wave 1. Whoops, I can't draw. I can't write. C is wave 1, and this wave 2 retrace cannot come beyond the 618. Okay, it can wick down, but it cannot come beyond the 618. What you're saying can come beyond the 618 is simply the B wave. You're counting the B wave. You're treating a B wave as a 2 wave. A B wave is a B wave. A 2 wave is a 2 wave. You can kind of get by fudging them and saying this 1 2 1 2 stuff, but it's not accurate, and you just got to think about it. That's why just don't listen to just what people say. Think about it. You got to sit and meditate on these principles, and once you really get them down, they'll help you a great deal in charting. And then you have to figure out your own process, how you want to use all of that knowledge and apply it to a good trading method, a good trading style that fits you. Okay, so that's the idea. That's what I'm doing every day. And this reversal thing is just my favorite thing because I love bottoms and I love tops. I love finding bottoms, identifying them, and buying bottoms, and I love identifying tops, selling tops. That's like what excites me the most. So that's what I use my Elliott Wave charting skills for, right? But you may not necessarily be that type. You may want to get in on the, at the end of the 2 wave of the major degree, or you may want to get in at the end of a 4 wave, right? To each his own. Actually, speaking of which, I actually want to get in. Whoops. I may make a trade live here. I want to get in at the end of this 4 wave because I just took profit up here. This was an extended wave 3 that we got. It went from, this is 1, 2, right? Again, not 1, 2, 1, 2. See, Elliott Wave International people, a lot of them say 1. This is 1. These are details, but the devil's in the details, right? Hundreds, thousands of dollars are in these details. Because if you're reading this as a 2, if you're treating B waves as 2s, then how do you set your stops for 2 waves? You can't. You can't use 786 as a stop for your 2 wave because for you, your 2 wave can come all the way 100% of your 1 wave. It just can't retrace your 1 wave. That's goofy. That's goofy. Anyway, no, I'm not like disparaging. There's tons of excellent world-class traders at Elliott Wave International, and that's the beauty of it, right? Even with that kind of goofy little stylistic quiddity or like idiosyncrasy, you have people that have forged systems around their understanding of Elliott Wave theory and are consistently profitable traders. Okay, let me give you an example, and not disparaging anybody, but Crypto Savvy, a few months ago, I was talking with him, and he said, I said, hey, what do you, I disagree with that analysis because such and such and such, it can't be, I said it can't be a flat correction because it's a 535. A 535 is a zigzag correction. He goes, no. There are flat corrections that are 535. And he pulled out an internet page to show me. And I'm like, bro, like I read Ralph Nelson Elliott's own work, right? The Secret of the Universe, my favorite book by Elliott. Okay, and then other works. I've never read 535 is not a zigzag. Everybody knows 535 is a zigzag. He's a great trader, right? He's pretty good, but he has that omission, and he's still a profitable trader. That lets you know, even with omissions, glaring omissions in your base knowledge, how much better would Crypto Savvy be if he had his fundamentals, all his principles down in that one thing, right? I said, no, that's wrong, bro. Like, that's not correct. But he was gonna die on that hill, but it still works for him. So that's just letting you know, trading's another level. It's obviously a big part of it is understanding where the price is going to go, but sometimes even when you know where the price is going to go, you still lose the trade because trading is another level of mastery. So I just want to convey all of that because a lot of times people say, hey, you're completely wrong, you must have gotten wrecked, or I don't know. Trading's just another monster, right? Charting is simple compared to trading. Anyway, so yeah, that 1-2-1-2 stuff here, it's not that. So Elliott Wave International people, a lot of them, not all of them, I'm sure, will say, I'm sorry, I don't know why I can't write properly. And I don't know how this live stream has digressed into, my thoughts on different interpretations of Elliott Wave theory, but that's fine. That's what the hell the live stream's for, right? Banter. This 1-2-1-2, now I understand why people say Elliott Wave theory is bullshit and it's confusing and it's just, people just make up stuff. Because that's like, come on, what are you just gonna call 1-2-1-2? Like, what's a 1 and what's a 2? Is this a 1 or this a 2? They can't both be 1-2-1-2. They're of the same degree, right? Pick one. So basically, all I'm saying is that if you really study it, it's clearly anything that comes. So this is clearly, this is clearly 1. This is clearly 2. All this A, B, C serves as the motive wave, which is also 1. It's shared. Okay, that concept is lost on a lot of people. Basically, before you get your 1 is not only your 1, but it blends into the previous impulse of the previous correction. Okay, so that's what I'm saying. A lot of people don't get that subtlety. Anyway, I was saying that I want to get in here because this is 1, 2, 3, 4. I want to get in here for 5. So that I'm going to be trading that live, most likely. And let me just set a little bit of an alarm. This is, I don't know if you guys ever see me trade, but this is what I do. So this is relatively easy, right? Because we're in the impulse, just trading waves. So I'm going to use my Fibonacci extension tool. Okay, let me explain what I'm doing here. So essentially what you're going to get, okay, if you don't get a complex correction, but I don't think you're going to get a complex correction. I think it's just going to be, hold up, let me not speak. Yeah, I think it's just going to be straightforward. It might not be, but I'm planning on it just being a straightforward flat correction or whatever this is. Yeah, this is a flat correction. So I got my 3 waves here. I got my B wave here. So A, B. I think I'm just going to get my C down here between the 1 and the 1, 2, 3, 6. So that's where I plan to enter. So what I'm going to do is I'm simply going to set an alarm right before the 1 to alert me to start paying attention and make my entry. And I'm going to make my entry to go long for 5. And because we got, and this is another good point. So because we got an extended 3, and I'm going to prove it to you. So this is 1, this is 2, and here, let me prove 2 does not extend or 2 does not retrace beyond the 618, my friends. My friends. A lot of people think that, like a lot of good websites, a lot of good YouTubers, you know, that do Elliott Wave, but don't get your basics, don't get your fundamentals, don't get your principles from random people, because if they're wrong, you can't blame them. You gotta, you know, you gotta take responsibility for it. And if they're wrong, you kind of put that into your fundamentals, and that may create habits in you, in your trading, where you're like, oh, that's a 2 wave, and you don't even think automatically 2 waves cannot retrace beyond the 618, and then, you know, I don't know, you do something goofy because you got those bad habits because you don't have a good solid foundation. You need a good solid foundation to even make it using Elliott Wave theory in trading, I think. Anyway, what was I saying? Oh, 1, 2. Okay, so if you project 3's meant to, on average, end between 1618 and 2, right? So if we go from the bottom of 1, top of 1 is actually here. Okay, and then bottom of 2. Oh yeah, I was going to show you two-wave retracement. I'll show you that in a second. But you see, we expected 2 or 3 to come between here, okay? But we got 3 coming up to the 2618, which is an extended 2-wave, or 3-wave rather. So you know that if you have an extended 3rd wave or extended 1 wave, then you're going to get a truncated 5th. So I'm going to get in, like I said, around here-ish, but I'm going to set my targets for the 1, 2, 3, 6, okay? And that's an important point. You know that the wave 5 typically goes to the 618 of the inverse 618 of wave 4, but it can also go to the inverse 1, 2, 3, 6 of wave 4, okay? And that's in the book Elliott Waves Made Simple. He simply says inverse 1618 of wave 4. I would add to that inverse 1, 2, 3, 6, because I've been burned waiting to take profit at inverse 1618, but it never got there because 1, 2, 3, 6 is also a valid take profit point for wave 5. Okay, so that's what I'm gonna do. That's my plan. What else? Oh yeah, retracement of wave 2, and then I'll get to what the hell's Bitcoin's doing. But I don't know, I'm having fun. I love this stuff. This is like all I look at every day, and so I'm interested in it. Hopefully you're interested in it as well, because you're subscribed to the channel. Alright, so you see here, this is the bottom of 1, top of 1. Here's a 2-wave retrace, and here's a 618. Do you see this? and we're on the 1 minute chart. That also you have to take into account, but I'm going to show you a little trick that I use even on small time frames to get good perspective. So because small time frames, you can see some price go beyond your Elliott wave, or sorry, your Fibonacci levels to an extent where you think there's a violation, but there's no violation. It's just a small wick. The trick is this: you want to measure the percentage. Okay, so take your little ruler tool and you measure the percentage of the violation beyond the level, and you see here is 0.07%, which is insignificant. From my experience in my studies, and I document all of these quote unquote violations, anything beneath 0.2 is a wick and it's valid. So it doesn't matter what time frame you're on, just pull out your ruler and look at the percentage. So in any case, I say that to mean the 618 in this case has technically not been violated. It's been wicked beyond by the B wave, which is normal. Okay, so that's your 2 wave. 2 waves cannot retrace beyond. If it goes like this, it's a B wave. Okay, very simple. I promise you, it will make your life simpler, because you're gonna be confused to all hell if you think 2 waves retrace beyond the 618. You won't be able to identify 2 waves or B waves. They're just gonna blend into one another. You're gonna confuse all of them. And one of the, I guess, more advanced levels of technical analysis is being able to read corrections, right? You can't read a correction properly if you don't know, the difference between a 2 wave and a B wave, right? So that's just my 2 cents. Okay, let's zoom out and let's see what the hell Bitcoin's doing. So I think I said this earlier. Here's one thing I didn't mention. So I had this kind of like a wedge, like this or something like that, and I changed it to a channel because I thought it was more representative of the price action. It's more of a channel, less of a wedge. The top is okay, but the bottom was a bit too narrow, and that also, some people may have gotten nervous drawing a wedge and seeing this consolidation, this reversal consolidation in the morning, because this reversal consolidation was beyond the bottom, the bottom boundary of the wedge. But if you draw a channel, you're just within the channel, so it's okay. You haven't really broken support. Okay, but the important part here is, oh wait, what's going on? Breaking out already? Am I getting my wave 5 prematurely? Or is that my B? No, that's my wave 5. Looks like my wave 5 already. So much for my wave 5. Let's see. No? Let's see. If this is an A, this cannot be a B, I don't think. Let's see. Yeah, I don't think it's a B because it's retraced beyond the 1618. Okay, so this must be a wave 5. It must have given you here. I'm not exactly sure what's going on here, but this may be the end of 5 waves. I'm saying 5. Yeah, I think that was the wave 5. 1, 2, 3, 4, 5. Yeah. Okay, so I guess I'm not entering that, which is okay. I got the lion's share of that move. Okay, so my next entry is going to be for wave 2, because this is just a wave 1, I believe. wave 2 might be around here somewhere, right? Minimum retracement is 382, we know that here. So I don't know if, what your guys' trading style is, but I set alarms so I don't have to look at the charts incessantly or constantly. I still do anyway, but set alarms, right? The minimum retracement of a 2-wave is the 382, right? 2 waves retrace between the 382 and the 618, right? So let's zoom. I use the 1 minute chart quite a lot, by the way, just so you guys know, because believe it or not, but price doesn't take long. It usually moves quite quickly, and to see the detail that you need for really good analysis, a lot of times you need small time frames. So the minute chart is very useful. If you don't have the minute chart because your TradingView subscription isn't advanced, then I think if you're a serious trader, it's worth it. It may save you a lot of money. Anyway, so I put my alarm at the 382 because this to me, and this is a good segue, this to me is simply, as I've been saying, A wave, B wave, C wave, okay? And the C wave's obviously going to look like that. And I think that I think that the target of all of this is simply right here. So between 46 and 47 thereabouts, right? I don't even need to turn on the VPVR, and I don't know, for those of you who are subscribed, you may have noticed I don't use indicators anymore. I'm just pure price action. I just enjoy price action. I don't see the need for indicators, to be honest. Not to say that they're bad or anything, but I used to use the VPVR all the time, but I don't need to use the VPVR to look left and see that there's a lot of buying and selling right here. So this is a likely point of, there's a likely line of resistance or level of resistance there where I think price will pretty much end at. So I think that's what's going on with price action. So I expect Bitcoin to be running up 5 waves, and even more specifically, right, if this is we can use our Fibonacci extension tool, right, trend-based extension tool or whatever it's called. So take A wave right here. This is the A wave, the retracement of the B wave, and between the 1 and the 1, 2, 3, 6, and what do you know? The 1 and 1, 2, 3, 6, which is the target of a C wave, given an A and B wave retracement, land exactly where we think, just looking at price action, looking at where Bitcoin could find resistance, this is exactly where it would land. So here's what we call confluence. It's highly likely that Bitcoin find sort of end, the uptrend ends between 45.6 and 46.7. And because I like to take profits conservatively, some of the worst feelings in the world when trading, getting stopped out for a big loss, obviously, but even not worse, but maybe even worse. You were right in your analysis. You traded everything properly. You used good risk management, but you overshot your target. The price went where it was supposed to go, except it barely hit your target, and it went back on you, and you lost the trade. That sucks. After that, I stopped ever being like, I'd rather get 80% of a bag or 80% of a win rather than, lose or get nothing, right? So I'm going to be conservative. I'm not going to be greedy. I'm going to set my targets at the 1. So on this chart, it's 45,633. On Phemex, it may be a little different. This is Phemex inverse perpetual futures contract. I get it. But for real accurate precision, I use Phemex own sort of not exchange but chart on their website to set my targets. Okay, so that's basically where I'm seeing Bitcoin come. I think we can expect a 10% pump, right? And how long will that take? Okay, this is the next level of Dean's skills development. Okay, I gave this a lot of thought. Okay, I'm trading, I'm doing okay, I'm winning consistently, all right? But I want to improve my quality of life. I don't know about you guys, but I spent a lot of time looking at the charts. I spent a lot of time, worrying about if my target's going to be hit, if my stops are going to be hit, what the price is doing, right? I have an idea. I think it's going to go this way, but is it going to go that way, right? I spent a lot of time doing that. And when is it going to break out? I don't know. Maybe I need to wake up earlier, right? If you want to trade consistently, if you want to trade for a long time, I think you have to also think about quality of life, right? One of the things that would improve my quality of life substantially would be knowing more or less when price is going to do something. So that's why I'm going to start paying attention to time a lot more. One of the most challenging things to do in crypto, or not just in crypto, in technical analysis, is giving time predictions, right? You can say it's going to go up or down, but when is another challenge. But I think that that's also possible, right? Just as it's possible to use math to tell you that Bitcoin is likely to hit between the 1 and the 1236 Fibonacci extension of this pattern, right? It's all just patterns. It's all the whole damn thing. Patterns and patterns. Fear and greed and the markets and the Fed and all that stuff. They're all just patterns. And so why can't we look at time as being another variable of pattern? And it is. It's regular. There is a periodicity to price action. And, I kind of had my eureka moment when looking at this. Like, look at the regularity. 1 wave hits, 3 wave hits, 5 wave hits. There's regularity in this shit right here. And then the reversal, the B wave hits, right? I was looking at this and I'm like, when am I going to take profit? I don't know when to take profit on my short because I was short, right? You guys know I was short for a while during the length of this channel, but I didn't know when to take profit, right? I knew I wanted to take profit at the base, but I didn't know when. I could have helped myself to give myself a window when to pay attention, when to wake up and take profit, right? By just trying to figure out the distance between all of these hits. And it's quite regular, as you will agree. You see that. So this kind of gave me an idea, like, dude, you need to use this information. Like, you're looking at these charts, you figure out all of these patterns, like, incorporate time, make your life that much easier. So you're not looking at the charts or thinking of the charts 15 hours, 16, 17 hours a day. Like, making money shouldn't be that complicated, right? Even when you're trading and not buying and holding. So that's my next level. So that is why I'm going to start, just like I look at, I don't know if you guys know this, but for those of you who are subscribed, I just discussed violations of Fibonacci levels, right? So if I pull a Fibonacci retracement and I see that it's a valid 2 wave, but then the price dipped below the 618, I measure using the ruler tool how much it dipped percentage wise, and then I document it. And I do that tens and tens and tens of time, and that's how I know that anything between 0.05 and 0.20% is valid. Anything beyond that, I've seen 0.3% like once or something like that, but anything beyond that is typically a violation, and it's not a 2 wave. And then it tells you, dude, it's breaking the 618, right? Or it's breaking the 382. So I document this. So what I'm going to start doing is documenting the time it takes for these patterns to play out. And that's what this is. My friends, when I find these patterns, watch out. When I find these patterns, when I find out when the hell, I don't know, I don't want to be premature. I'm still doing my research, small sample size. You know, I can backtest a bit, but I may backtest a little more. But what I'm going to do is I'm just going to do it real time. I'm not going to make such a job out of it, but I'm interested in it, so I'm just going to do it as I see it. So basically what I did was I took this A wave right here, A, B, C, this A wave right here, and I measured it in terms of time, and it took 1 day and 23 hours. I took this B wave, right, started here, and then went, of course, as you know, here, and all the way down here, and I measured it. And it took 5 days and 8 hours, okay? What I've noticed so far, what I can tell you from my observations and maybe I've looked at 5-6 examples, the A wave is the fastest, the quickest, okay? It happens like that, relatively speaking, right? You can the beauty of this, you can use this on all time frames. Obviously, I'm using this on the 15-minute time frame. I can jump down to the 5-minute, jump down to the 1 minute. The A wave is always the fastest. So that's what I'm saying. These impulses are quick. What takes, usually, from what I've seen, 3 times as long or 5 times as long, but the average I've seen is 3 times as long. Most of the time I've seen 3 times as long on average is the B wave, and the B wave is counter. So this is the trend. The B wave is going to be counter. So blah 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 blah, all this stuff. It's going to be 6 days of going against your trend, okay? And finally, this is a resumption of the trend in a pure impulse, pure C wave impulse. That usually takes okay, this portion, and I hope you guys remember what this is going to look like. And and this is important because I'm not measuring just the C wave. This C wave right here probably takes a day. So 23, 24 hours, right? Most likely it's probably going to take about a day and a half, maybe 36 hours, something like that, okay? I reckon 36 hours, just based off of what A did, because A was, needed that. Sorry, this right here, A, B. So I reckon it takes about the same time or a little less than this, okay? Just the impulse. But what I'm talking about here is not just the impulse. Remember, this whole reversal pattern is A, B, and then a C section. This time that I'm measuring is the C section, because let's zoom out for a second. We're not just looking at, 1 hour chart. Okay, we're not just looking at a little reversal coming up here, right? Remember what our target is. We're going all the way to 55 to 58K, I reckon. Okay, we're going to retrace we're going for a 2-wave retrace. So that's, let's see. Okay, let me erase all of this and go on the hourly chart. Here we go. Okay, so we want to get pretty high to about 58. Okay, good. Okay, I just needed a little bit of context, all right? Do you see? I don't need the VPVR. I see price action giving me a lot of buying and selling here. This is some resistance. This is a pocket of resistance. It's not, there's going to be some rejection over here, even if there's continuation, which I don't think there will be because it's a 2-wave, and this is a 618. This represents a 618 of this retracement. But anyway, This is our larger A wave, remember. Right? It's kind of hard to get some context, but because, you know, we do this and we see this every day, this is our larger A wave. This is our larger 5 waves kind of zigzag. Well, it's not a zigzag because this is 3 waves, right? This is 3 waves. This is 5 waves. And 3, 5. Whoops. I'm confusing myself here. This is 3. I was like, what? This is 3, 3, 5, okay? This is why we're anticipating 1, 2, 3, 4, 5 up clean. Because we already have A and B, right? This is what I anticipate our 2-wave correction will look like. And you can apply this to pretty much most of the market. Not the whole market, but most of the market, okay? So this is the larger kind of big picture of what I'm seeing with Bitcoin. Remember, once we hit this, it's giga nuke down, I think. You know, resuming this downtrend. People forget. And people are going to forget in the time it takes. And we're going to look... Here, let's just do that right now, actually. Right? Let's do that right now. How long did this larger A wave take? Calling this an A wave. I see 3 waves, right? I see 3 waves. I think that's a valid A wave. Okay. So A, B wave retracement, and C. Let's see. Did that retrace? Whether it's a zigzag or a flat, it's an A wave. Okay. So let's see the time it took. Doesn't really matter if it's a zigzag or a flat. So let's not waste time. So from here to the end, which was approximately here, it took 20 days and 12 hours. Okay, so let's just break out our text tool. 20 days, 12 hours. Okay. So that's gonna be the fastest. Okay. In my experience, right, from what I've seen so far, and I just started doing this, okay, so bear with me. And so I think all of this is A, B, 1, 2, 3, 4, 5. Okay, that's the B wave. So it's basically, you know, a flat correction followed by, you know, an impulse, right? The first leg of this impulse is the C wave of the flat correction, okay? That's how that works. And so I'm going to measure the B wave as being hold up, let me remove the marking so I can see exactly where the candles lie. So here's the end right here. This is the last candle of this is 5 right there. Okay, so I'm gonna use that. So here we go. This is 13 days and 9 hours. Okay, and that threw me off. I thought that we were gonna get a quick B wave for our, you know. Hold up 1 second. 13 days and 9 hours, I said? I think. Correct me if I'm wrong. I think I said 13 days and 9 hours. Anyway, 13 days and 9 hours for this B wave. I thought basically our B wave that we're in right now, or that we just finished, was going to look more like this one. That's why I thought it was going to be super swift and everything like that. But here in this case, you see the B wave takes a lot less time than the A wave. So it's not always the same. But I'm going to document it anyway and try to make sense of if there are any patterns, time patterns, right? Okay, now, after B, you get C section, not C wave, C section. So what we got was a quick pivot, relatively quick, not really. Let's see. We got a pivot into a 1, 2, 3, 4, 5. That's your 5 waves up. But again, the C section isn't necessarily, it's not pure impulse because it turns into an A wave. And this is how it does that. So that C wave has a retracement, which is this. And then the 5 waves that we're going to get are going to be kind of your A wave. Okay, that's your A wave of the C section. I hope I'm not losing anybody, but it's not that complicated once you get the pattern. The pattern's always the same. It looks a little different, but it's always the same fundamentally. Okay, so this A, B, C. Okay, and I think it's going to come around here, like I said. So that is going to be your A wave of the C section. I think you're going to get a B wave, and then you're going to get some kind of reversal, C, pull back, and go. Okay, so how long is this going to last? I think this whole period, right from here to whenever the hell it ends, is going to last approximately 20 days and 12 hours, or more or less 20, 21, 22 days. So far we've been in this portion for 11 days. So I'd say about 9, 10 more days of this, okay? And the reason I say this is because usually the parts that take the longest, there's like one parts that's the shortest, and then 2 parts that take the longest that have more or less equal or similar time frames, okay? So that's why I'm saying 9, 10, 11 days more, because this was 20 days and 12 hours. So this is like the next level of my analysis, and again, I'm working on this. It's not like I'm learning this from anybody. I'm just using the principles of Elliott wave theory and applying it to price action and deriving patterns. And people do that all the time. But the difference is, the foundation, the core of this technique lies in my understanding of Elliott wave theory and, price action patterns. Corrective patterns, impulsive patterns. So I think this is why it's really important to get your fundamentals down. Once you get your fundamentals, you can take it anywhere, right? I'm literally developing a new system that I don't necessarily know of. I haven't read about. I'm sure other people have done this before, but I just don't know about it. So I'm developing it on my own, in my own way, okay? Just using the principles. So that's what I've been up to pretty much. I hope to really take this to the next level because I really want to get good at knowing when, more or less, things are going to happen with some degree of accuracy so that my trading gets a little less laborious. I'm not sitting and babysitting charts so much because, for instance, like when I was here, and I put that there. I didn't know when this was going to break out. I knew that we had printed 5 waves, okay? But from where I identified 5 waves to the breakout candle, just the beginning of the 1 wave, was 20 hours. So for 20 hours, I was waiting. Like, okay, I identified 5 waves, and I know we're going to get some sort of reversal, but like going on the smaller time frames, even if you can read reversals, right? And I think I can read reversals decently well. Right? This is the end of 5. What's the first thing that happens? We get A, right? I know. Ooh, breaking of trend. A retraces to wave 4, or the region of wave 4 of the previous impulse, right? So I know that this is a break of trend, right? For sure. This is a reversal that's initiated. You have my attention. Okay? Now you get your pivot and your B. Okay? So you get your A wave. You get your B wave. I'm like, okay, I know how this works. After A and B, you get something called a C section. So basically you repeat A, B, and C. So right here, I'm reading this. I'm like, I know what's going on. A, and then B is funky and, probably retraces to the 1, 2, 3, 6 of A. I know that. But, you just get lost in all this mess. When is B gonna end? I don't know. And after a while, you start doubting yourself and thinking, is this gonna break down? Is this going to nuke to 30K? Like, am I going to get stopped out? Or worse yet, liquidated? You shouldn't ever get liquidated. Always set a stop. But you know what I'm talking about. So, it would have helped to know, more or less, when the hell to pay attention based on the time this took. So I was like, later on, this A, if I measure A, it took 1 hour. Quite literally just 1 hour. I'm just going to write this in real quick. So 1 hour for A, okay? All this B shit took how long? It took... And you can try and trade B, but B's up and down. It's one of the worst things to trade because it's so up and down. So I try to stay away from it. 10 hours. Did that say 10 hours? I think it said 10 hours. 10 hours, 11 hours, something like that, right? Say 11 hours, round up. I don't like rounding too much when I'm documenting, but I'm not documenting this. I'm just like using it for example purposes. So A took 1 hour, B took 11 hours. So the C section, based off of what I've seen so far, I would have estimated would have taken 11 hours, right? But I would have been off even using 11 hours, right? Because again, that shit took 20 hours, 20. And meanwhile, people are unsubscribing because I'm like, yo, we're printing a reversal pattern. And they're like, dude, I don't see any reversal. All I see is chop side nuking to the downside, right? But I'm like, no, I'm pretty sure it's a reversal pattern. Actually, if you measure the C section, okay, let's measure the C section from this candle where B finished all the way to the first candle of the one wave, which is right here. You get 9 hours. Look, guys, I think we're onto something. It's not 20 hours. I don't know where I got that. What the hell is going on here? Okay, I think here we go. So that's 9 hours. So if I gave myself, let's say I told myself 11 hours, maybe, give or take, I would have known, 8 to 10 hours, give it 8 to 10 hours, then pay attention. Then I would have started to examine and see, okay, I see a breakout here. Here's your Elliott Wave International 1212. I'm sorry, like that's goofy as hell. 1212. No, it's an A B C, okay? Not a 1212. Like what the hell is 1212? A B C is the first wave, then you have your 2 wave, okay? There's only 1 2 wave, all right? But I would have paid attention around this region. And if I made an entry, let's say I goofed up and made an entry around this region, that's an optimal entry. So there's something to this, my friends. Start if you're so inclined, if you're really serious about trading, right? And you think you have a good hold on your fundamentals. And guys, if you're serious about trading and you're not reading books, or you haven't read a book and marked it up and like know it from forward to backwards and know the rules, know the retracements, you're not serious about trading. You're not giving yourself a fighting chance, because this shit is way too complicated to not know the rules backwards and forwards literally in your sleep. Literally in your sleep. I'll tell you why. Because you'll wake up sometime and you'll look at the charts, or in the middle of the night you'll look at the charts and you'll try to make a decision, and you're literally half asleep. And if you can't, in your half asleep state, know that a B wave goes between the 0.5 and the 1618, and an extended B wave is, or expanded B waves between 1236 and the 1618, and a 2 wave goes between the 382 and the 618, and a C wave in a correction typically goes between a 1 and a 1236. If you don't know all that basic stuff, you're not giving yourself a fighting chance. It's way too challenging, because you add to that the emotions, you add to that the fear, you add to that the greed, you add to that the fatigue of looking at a chart for hours on end, waiting for a trade to develop. You're not gonna make it. You gotta give yourself a fighting chance. My favorite book, Elliott Waves Made Simple. Steve Sinclair, I don't know what the hell who the author is, but it's a great book. I think it distills everything that Bob Prechter says in his Elliott Wave principle, and Bob Prechter has like 10-11 editions of that book. But Steve Sinclair really is a student of Elliott Wave theory, and you can tell by reading his books. And literally, I think it's perfect except for like one or two things. One of the things is he says that like I mentioned this, the inverse, the target of a 5 wave is either the 618 of the 3 wave, which is correct, or the inverse 1618 of the 4 wave. And I would add to that, it's not incorrect, but it's not incomplete. I would add to that also the 1236. Look out for the 1236. That's a possible target of your wave 5. And then like there are a couple other things, like literally I can count the things on one hand that I would add as a note. Also, sometimes the C wave of an ABC correction, the C wave doesn't extend to the 1, or because he says that the C wave extends to the 1, typically extends to the 1 to the 1236. I would say it also kind of often extends to only the 786. I would add that, okay? Other than like those two things, and maybe one little thing that I'm not recalling at the moment, that book is literally the most concise, clear example or clear representation of the entire Elliott Wave theory. And complete with examples, complete with complex corrections. It's not to say that you read it and you just master it. You have to practice a lot, maybe reread it, see examples. I've gone back into that book so many times, marked it up so many times, but you have to have a guide. It doesn't matter what. Give yourself a chance, my friends. If it's not, Steve Sinclair, I think his name is Steve Sinclair, or whatever his name is, the Elliott Waves Made Simple guy. If it's not Bob Prechter or the Elliott Wave International people, if you're not doing the 1212, whatever you do, learn it and learn it well and be consistent. But don't try to learn this and that and the third. Just figure one thing out and try and master it. Then try your hand at trading. You're gonna be so much happier. And I just noticed a lot of people in our space, because it's a young space, they don't really do the work. Like, they don't treat it like, it's not a job. I mean, it's fun, but they're not as diligent, right? You need to study this shit. You really do. Be a student of this system, and it'll pay back a great deal. But like, look, I'm excited about this, and I'm gonna keep charting, or not charting, but tracking this time stuff, because wow, it's gonna save me so much time, so much sleep, so much anxiety, so much money. Because sometimes I promise you, I get in a trade because I'm tired of waiting. I promise you, I've done it so many times, thousands of dollars. I've had 5-figure trades where I'm like, fuck it, I'm going to bed, I'm getting in now. I know this is not the optimal entry, but I don't give a damn, because I'm tired. I've done that so many times. But if I'm using this system and giving myself a window, more or less, at least I can go to sleep and say, hey, if I miss it, I miss it, right? But high degree of probability, I need to wait around 9 hours from the beginning of this, or 11 hours, let's say, because I would have gotten this, right? 10, 11 hours before getting some sort of impulse. Okay, so yeah. Yeah, thanks for coming to my TED talk. That's like my rant on price action and what I'm excited about. But this reversal pattern is something. It's not the simplest thing to explain, but I feel like the more I explain it, the easier it is to explain, and hopefully the more you hear it, the easier it is for you to see. It's essentially just using the same principles. It's one big goofy flat correction, right? That's all it is. A, B, and C. That's it. Except it's composed, meaning C is not purely impulsive. A is standalone, B is standalone, but C is composed of a base of a reversal, a mini reversal in and of itself before you get your purely impulsive part. That's all it is, right? Let's not complicate things. Yeah, that's pretty much all I wanted to show you all. I showed the targets for Bitcoin. I showed my new time trick. What else? Oh, and I'm gonna go over EOS in a moment and whatever else you guys got. So let's just take some questions really quickly. Hi everyone. Sorry I didn't say hi. Hello, welcome. Thanks for joining. Steve, Cool, Todd. Todd, yeah, Todd, you'd like to say that. Wicks and tails like to be eaten. Yup, that's true. That's very true. Yeah, typically. I used to really, I don't think like that as much, but I think that's accurate, right? I'm like one track minded with these reversal patterns lately. I keep volume on just because I use volume quite a bit actually, and I don't even think about it, but I use it often when I look at if a breakout's occurring. I look at volume bars if it's corroborated by volume. If it's going to be a consolidation, I look at if volume's decreasing, right? If price is going up and volume's decreasing, if I see some divergence on volume, then I know it's a consolidation for sure. Like when I was looking at the price down here going down, and I'm like, are we gonna break down? And I'm looking at volume. I was looking at volume decreasing. It gave me a little bit of comfort that okay, this is just a consolidation for a move in the opposite direction. But I don't know. I leave volume on, but that's the last indicator that's left standing. All my other indicators, including like my partner, Vital Algo, I rarely ever use that. Not to say it's bad. It's just not my style. Everybody has a different style. I used to use EMAs, the 21 and 44, 55, 144, VPVR. It's just not my thing. Here's the Vital Algo indicator. To each his own. I like price action, just using price action. That's my favorite. Yeah. Anyway, let me turn this off. I hate how messy it is. But obviously you can make it as messy or simple as you want. You can tweak it. Best indicator on the market. Vital Algo. That's a partner of the channels. Nice bounce. Yes. Just bought Elliott Waves Made Simple. Gonna start reading it tomorrow. Oh, awesome. Yeah, it's really, and I love. I mean, I like this stuff. Obviously, I do it every day. Elliott Waves Made Simple is the most practical manual I've seen. I've read. I also love. I just want to get into Ralph Nelson Elliott's head, right? He explains certain things, and some of his explanations are a little. It's not like WD Gann cryptic, but it's like you can tell he doesn't completely know how to explain everything. Like he's discovered so much, and it's not so easy for him to explain because there's some things he doesn't fully understand himself. He doesn't talk too much about complex corrections, for instance. That's something we've developed over time. He noted it, but like we fleshed it out over time more than he explained it in his writings. But he's big on time. He's a freaking boss. He was awesome, and he was a huge student. I mean, taking 70 plus years of Dow Jones Industrial Average to find these patterns. And he titled that book that I like to read, I read The Secret of the Universe, because he thought once he found these patterns it was over. It was like the secret of the universe. Anyway, let's Aziz entry suggestions. Like I said, just very, very simply, I see 5 waves here. 1, 2, 3, 4, 5. I'm also out of the trade. I took profit around here. So my entry, you see this alarm here. It is at the 382 because we know the minimum retracement for a 2-wave is a 382. So it can also go down all the way to the 618, obviously. So that's where I'm going to start paying attention. I'm going to start looking for, a 2-wave retracement. It's most likely, and let's go on the 1-minute chart just to see all the detail we possibly can. It's most likely going to look like something like this: A, B, C, something like that, right? It can look a lot of different ways. We know that, right? But maybe something like that. And at the end, whatever this looks like, just try to track it, and then you'll see a mini reversal, and you get in for wave 3, because all this is wave 1. So the next one is wave 3, and then the last one is wave 5. And I think we're going to be going up for, a decent amount. What'd I say? Like a day, maybe 35 hours, something like that. Anyway, yeah, just get in and then, let it ride. Or trade it using the waves. But I would let it ride, because you may get extended waves and you may take profit a little too early if you try to overtrade this. So I would just try to find a good entry and let it ride until we get to resistance, which is either here. This is going to be one resistance, but I think your final target is likely to be, wait, where is it? Okay, I can't see it right now. Let me go on the higher time frame. Okay, here. Yeah, I think I'm putting my take profit up here, because I think that if this is 1, right, 3 is gonna take us up here somewhere, and then 5 is gonna end up here. So that's what I'm seeing. So Aziz, that's my advice, not financial advice, on entry. Yeah, it's not work, Aziz. It's fun. I'm having fun. Love this stuff. Just sharing it with you guys. I'm done working. I'm done working. I think that's the magic and beauty of crypto, right? If you find something you like, there's different things. Some people like to trade. Some people like to chart. Some people like to do NFTs. But essentially, there's so many things you can do, and a lot of people have fun doing it, right? And it's lucrative, and that's the magic of it. You're making money while you're having fun. This is like, people do the crosswords, right? I never got into that, and picking up paper and doing crosswords. I don't know, that's weird to me, but some people like doing it. Some people like playing board games and doing puzzles. Like, this is just a puzzle to me, a puzzle that pays you. Yeah, it's nothing else, nothing more. All right, let's look at. Okay. Oh, Steve asked, pertaining to this wave 2 versus wave B, what would be the telltale sign for identifying wave versus wave B? Wave B is crazy. Wave B looks like anything and everything. Wave B can literally look like anything and everything, right? There's no one thing wave B looks like. So wave B can look like a wave 2, but wave 2 seldom, if ever, looks like a wave. That's not true, because wave 2 is corrective, and we know the only thing that you can't get in wave 2, according to the principles, is a triangle correction. Okay, you only get those in wave 4. Although you can get pretty much anything else in wave 2. You can get a complex correction or a composed correction in wave 2. You can get flat, you can get a zigzag, you can get all kinds of things in wave 2. And then you're gonna have wave Bs in wave 2s. Steve, I think the way to think about this is not what is wave B versus what is wave 2. Just think of wave B as being a corrective wave. It's kind of like a piece. It's like, for me, in my mind, wave B, wave A, they're concepts. Wave A is the first correction. It's the first move of a counter trend. That's wave A. Wave B is the second move. I think that's the simplest way to think about it. You want to be liberal in your kind of definition of wave B in your mind, because it literally looks like everything. And to be able to identify them properly, you want to be open-minded. You can get impulses in wave Bs, just like we're seeing here, right? Here's an impulse. That's in wave B. It's a diagonal in wave B, right? You can get channels in wave Bs. This is 3 waves, 1, 2, 3 in wave B, right? You can get 5 waves in wave B. Flat corrections, extended corrections, zigzag corrections. Wave B can be bullish, can be bearish. Wave B is essentially, one thing it is, I don't know what it isn't, because it's so many things, but everything that it is, simply put, my best way of describing it, it's always the counter of your counter. So here's your trend. Wave A is always the counter. It's the quick counter. It's like, okay, party's over. We're gonna have to pull in a counter trend going against the grain. Okay, that's always wave A. Invariably, wave A is always the counter to the larger trend. Wave B is the counter to the counter, meaning, hey, not so fast. Boom. And then within wave Bs, you get wave Bs. Wave B is a mind F. Like, it is absolutely, yeah. But in any case, and wave B looks like shit most of the time. But I think the best way to think about it is just the counter to the counter, right? So if A is going up, wave B, more or less, whatever it wants to do, go up and down, it's going to go down-ish, right? It's going to go up and down and stop a lot of people out and confuse a lot of people, and it's going to go counter to the counter. That's wave B. And then after all that mess is done, you might get a little bit of a pivot into a wave C. Not a 1-2, an A, B, C into impulse. 1-2, 1-2. Sounds like a DJ. The thing is, I make fun, but a lot of these traders are nothing to laugh at. These Elliott Wave International like instructors, some of them, I mean, their win rates, I mean, these guys are legendary. I mean, they trade their asses off. They can trade circles around me. So I'm not making fun of them. I just think the concept of 1-2, 1-2 is goofy. Let me just put that out there, because they have some heavy hitters over there. All right. Wave B and D the most difficult? No. Don't think of it as difficult. Look, I wouldn't think of it that way, Steve. Wave B is not difficult. Make Wave B your friend. And let me tell you how Wave B can be your friend. Let's say you miss an exit. I do this all the time. Meaning, I miss the top, or if I'm trying to take profit on a bottom, I miss the bottom. And wave A happens. It's like, oh shit. I don't mind. I'm like, ooh, thank God for wave B. Unless you're going to get a zigzag, which wave B would only retrace between the 0.5 and the 618, then wave B is actually going to give you even more gains. It's going to give you more of a chance. So I missed the top of wave 5, no problem. Wave B is going to give me even more, because it's going to retrace beyond the 1 Fibonacci level. Do you see what I mean? Use wave B as your friend. It's not hard. Just don't mess with it too much, right? Use it and learn to look at it and use it, but not trade it. don't trade. Just use it. Use it for entries and exits. I would say, okay, and anticipate it. And the best way to anticipate a wave B, here's the best way. Don't make it too complicated. Once you see wave A, and wave A is always simple. It's always a counter trend. Big trend, counter trend of wave A. You know whatever the hell comes next is gonna be B. You don't have to know what kind of B. You don't know if it's a flat, if it's an expanded flat, if it's a regular flat, it's a running flat, if it's a zigzag, or if it's a whatever, triangle. You don't know. It doesn't matter. But you know it's coming, and you know that whatever happens after, the general trend is going to be counter to the counter. So wave B is not complicated. It's just you gotta zoom out and simplify it. Just conceptualize it. But don't try to trade up and down in wave B. I mean, you can, but you do whatever you want, obviously. But that's a recipe for disaster, because literally it can be anything and it's hard to anticipate. Okay. I told Leo that I was going to look at EOS like a long time ago, or not long time ago, some days ago, but that's an eternity in crypto. So an eternity ago. So I'm gonna do that. Wherever the hell it is. Oh, here it is. Okay, I haven't looked at this. I don't know it from Adam. I don't ever look at it, but I'm gonna look at it fresh here. But given that we look at Bitcoin every day, it shouldn't be that hard to make sense of, right? So let's zoom out just to get some context. Always want to get some context. Okay. Here I see something I recognize. I see a big trend down, okay, just like I see in Bitcoin. Here I recognize an A wave. I recognize that guy anywhere, okay? Textbook A wave, right? Here's wave 4 of the previous trend. A wave retraces right there to the wave 4 of the previous trend. Okay, got my A wave. Boom. Now, Steve, this is for you. Everything after this, pretty much, well, not there, probably here, right? Something like that, is wave B. Okay, this wave B so happens to be okay. And another thing, wave B is most likely going to have 3 waves, and you can try and count those. So 1, 2, 3. There's your wave B. It's not so big and bad, right? It's just messy, but you can make sense of it. So I get an A wave. So all I'm seeing in EOS is one big correction, right? A wave, a B wave, chop mess, and then I see impulse. So this is A of B, this is B of B, this is 1, 2, 3, 4, 5. I think I got it. Ooh, that's nice. It's fancy. We've got ending diagonal, okay? So that is not something you see every day, but yeah, it's not that rare. But you got an ending diagonal in B, right? So this is your B wave. This is the end of the B wave right there. This candle right here. Right there. And then this starts your C section, as I call it, right? Basically a pivot A, that's A, counter trend, right? And then you get A, B, C. Actually, A, B, C. It ended here. And then you're going to get a C wave. That's what I'm seeing in EOS, okay? See, again, all of this stuff is just principles. Keep it simple. It's all the same shit, just dressed up differently, yeah? A wave's an A wave, a B wave's a B wave. It doesn't matter the asset, it doesn't matter the time frame. A C wave is impulsive, and then a reversal pattern is a reversal pattern. It always always is going to start with an A wave, go into some sort of B wave, and then go into a pivot. You can't change direction without a pivot. So that's your A, B, C. Okay, and then the question is, how long is this C going to last? Is it going to turn into an A wave, and then so on and so forth? But anyway, always looks the same: an A wave, a B wave, and then a C section. Okay, so yeah, that's what I'm seeing in EOS. Same stuff I'm seeing in Bitcoin, right? More or less. I think that's pretty much it. Yeah, it's a little red, but I think we're gonna see a lot of green in the coming days. In the coming 2 days, a lot of green, followed by what I think is gonna happen. Right? Oops, wrong chart. This is the one. No? Hold up. I lost my Bitcoin chart. Where is it? This one? Yeah, here it is. Okay. So what I think is going to happen is once we do come up here, I think we're going to get another... This C wave is going to turn into a B wave. Okay, that's what I'm seeing. It's not going to be just yeah, because this is the C section. I've never seen it where the C section just goes yeah, I've never seen the C-section just go completely impulsive, right? That's why I call it the C-section, not the C-wave. And another reason you know that that has to happen is because you have 5 waves. Well, you already got your 3 waves. Anyway, I think that you get another B wave. So be careful. Do take profit here if you're going to be long, because I think we're going to get a B wave before we get the actual C wave taking us up to 58. Alright, so that's what I'm seeing. Hope this was helpful. Hope this was useful. I'm going to cut the stream not to make it too long. Thank you guys for joining. Appreciate it. Keep your losses small and your wins big. Keep at it. Master trading, you can definitely do it. There's so many people out there that have turned a hobby or an interest into a steady stream of income, and managed to quit their jobs because they're responsible, they use risk management, and obviously it's lucrative enough for them to do so. And you can too. There's no reason you can't. We have a nice community of people that are serious about trading. Doesn't mean you always have to be right. Be wrong, be free, share your ideas, be respectful, but keep learning. That's the key. Keep learning, keep honing your craft, and you're gonna reach whatever goals you have for sure. All right, take care, everyone. Bye.